Good morning, everyone, and happy Friday. Thank you so much for joining us today. My name is Brianna Mosier with the Flint Genesee Group, and today we are here to talk about the SBA's Restaurant Revitalization Fund. Joining us today, we have Andrew Younger from the Flint Genesee Chamber, we have Representative Dan Kildee, and we have Sean Gray from the US SBA. Before we get started, I do want to mention that you can drop your questions and comments into the comment box at any time, whether you're watching on Facebook or YouTube. A recording of this session will also be made available following the end of today's presentation. That'll be available on our Facebook page, our YouTube channel, and on our website, along with additional resources. Before we get started, I would also like to thank our virtual platform sponsor, the Ferris wheel located in downtown Flint, Michigan, which is the backdrop of me today. The Ferris wheel offers conference rooms, monthly membership, flexible workspaces, wellness center, classes, and just an overall great community. So thank you to them for hosting us. So to kick us off today, I'm going to hand it over to Representative Dan Kildee to give a couple of opening comments in support of our local restaurants, and then Sean will bring you back for your presentation, and Andy will bring you back for Q&A at the end of this presentation.
Well, thank you so much, Brianna, for hosting this, to the Flint Genesee Group for putting on this webinar to provide really important information on the Restaurant Revitalization Fund. Look, we all know this has been a really difficult year or so, and especially for small businesses and restaurant owners. This pandemic has halted operations, made it a lot more difficult to keep doors open. Our restaurants and our small businesses are really the backbone of our communities. They're not just good small businesses, but it's the place that we identify with so much. Too many of those restaurants and their employees have been hit really hard by this coronavirus pandemic, and it's had an impact. Michigan restaurants make up 10% of our employment base in our state and contribute greatly to the state economy and obviously to our tax base as well. Restaurants have had to be really agile, had to quickly and constantly adapt to the new safety precautions that coronavirus has required, and it's been tough. Whether it's setting up heating lamps to keep customers warm during the winter for outdoor seating, or limiting capacity to ensure social distancing, or just making those tough decisions about cutting operations or cutting back, our restaurants have not had it easy. And while the Paycheck Protection Program has helped a lot of small businesses, we still have to do more to help those restaurants, especially those Main Street restaurants that are the heart and soul of so many of our communities. And that's why I was so pleased to help craft and support the American Rescue Plan. This latest coronavirus relief package, which was passed by Congress, signed into law by President Biden, has provided almost $1 billion in support to our local counties, cities, and townships right here in my district, the 5th District. But it's also created the $28.6 billion funding for the Restaurant Revitalization Fund, which is what we're talking about today. The Restaurant Revitalization Fund provides direct funding to help restaurants and other eligible businesses keep their doors open. So the program, as you'll hear, operated by the Small Business Administration, will support restaurants with funding equal to their pandemic-related losses, up to $10 million per business, no more than $5 million per physical location. Obviously, most of these grants will be significantly smaller than that. Restaurants who receive money are not required to repay any of the funding as long as the funds are used for the eligible purposes and expended no later than March 11 of 2023. So if you own or operate a restaurant, a bar, or other small business in Michigan that's in a related field, you may be eligible to receive a grant through this program. The funding is absolutely necessary for the survival of many restaurants, and I know if we get this support into the hands of the restaurants that need it the most, then our communities will get back to normal in no time, faster otherwise than we would experience. So again, thanks to the Flint Genesee Group for pulling together this webinar to help our local businesses take advantage of this really important program that we created in Congress. And with that, again, I'm happy to be a part of this, and I'll stick around and listen. Thank you again for putting this on.
Thank you so much for joining us today. We really appreciate it. So Sean, with that, I'm going to hand it over to you if you want to queue up your slides at this time. Throughout today's presentation, again, just as a reminder for those who are joining in, feel free to comment or drop your questions in the comment box at any time. We're going to have plenty of time to address those at the end. Any applicable website links that Sean might be referring to, I'll also drop in the comments so you can keep an eye out for them there. But with that, Sean, I will hand it over to you to get started.
Okay, thank you so much for having us, for having me, and really glad to be here. Also, thank you so much to Congressman Kildee for all of his work. Michigan and really the nation has been really fortunate to have really responsive leaders throughout this crisis. And one interesting thing, as someone who watches the policy that's come out since the pandemic started very closely, because it's part of my work to help people get access to the funding and support, is that, at every step from CARES Act on, these policies have gotten more and more responsive to the needs that we heard from business owners in in our communities and in the areas that we cover. And so I've always been encouraged by that, and it's something that I've always been able to sort of point to when people pointed out in the first CARES Act that the covered period, for example, was only 8 weeks, and many businesses were forced to be closed during that period. So you saw all these changes. At each iteration, it's gotten better and better, and I hope that we'll continue to see that, and I'm grateful for that. Okay, let's see. Okay, as Congressman Kildee mentioned, the American Rescue Plan Act became law on March 11, 2021, and established the Restaurant Revitalization Fund. There was $28.6 billion appropriated for Restaurant Revitalization Fund, authorizing the SBA to award those funds until they're exhausted. And the fund must be used for eligible expenses, as Congressman Kildee mentioned, no later than March 11, 2023. So I'm going to go over some of the particulars of this opportunity for restaurants and people who serve food to the public. And we'll define sort of who's eligible, who's now eligible, and talk a little bit about some of the features of the program. So remember who's eligible. Eligible entities are businesses that are not permanently closed and include businesses where the public or patrons assemble for the primary purpose of being served food or drink. This includes restaurants, food stands, food trucks, food carts, caterers, bars, saloons, lounges, taverns, snack and non-alcoholic beverage bars, such as coffee shops, ice cream shops, or my favorite, bubble tea shops, bakeries with on-site sales to the public that comprise at least 33% of gross receipts. And so you'll see that for bakeries, brew pubs, tasting rooms, tap rooms, breweries or microbreweries, wineries and distilleries, inns, etc., that standard is important. So what they want to see is that your 2019 business model effectively comprised sales to the public on site comprised at least 33% of your business model. The thinking there is that, if you're principally a wholesaler, you may not have been as significantly impacted by regulations on traffic into and out of your facility. So that's something to bear in mind. Who's ineligible? Entities are ineligible for if any of the following apply. The entity is a state or local government operated business. As of March 13, 2020, owns or operates together with any affiliated businesses more than 20 locations, regardless of whether those locations do business under the same or different names or are in different industries. Has a pending application for or has received a Shutter Venue Operators Grant, is a publicly traded company, is permanently closed, is a nonprofit organization, or is not eligible for funding of at least $1,000. I want to go back to that point that's in bold there. So one of the aims of this program is to help businesses that are small and don't have other means of accessing capital in many instances. And so this threshold of 20 locations, and that's regardless of whether those locations do business under the same or different names or are in different industries. So I'll give you an example of that as we move forward, but that's an important point. How much am I eligible for? The SBA may provide funding up to $5 million per location, not to exceed $10 million total for the applicant and any affiliated businesses. The minimum award is $1,000. How is this program different from other SBA programs? Applicants do not need to register for SAM, which is the System for Awards Management, and the SBA will not require DUNS or CAGE identifiers, which are typically required when doing business with the federal government. Valid and unexpired individual taxpayer identification numbers, or EINs, are acceptable. Who is eligible? In terms of organizations, eligible applicants must be one of the following forms of organization: a C Corp, an S Corp, a partnership, a limited liability company, sole proprietors, self-employed individuals, independent contractors, tribal businesses, and LLCs taxed as S Corps. B corporations are eligible, but they must select either C Corp or S Corp in the application, depending on how they're taxed. Franchises are eligible. Any business concern operating as a franchise and meeting all other program requirements is eligible. The franchise must be listed on the SBA franchise directory. In the application portal, applicants will be able to look up their entity on the SBA franchise directory. For brands not listed on the directory, including brands that have previously been denied listing on the directory because of affiliation issues, the franchisor must submit the franchise disclosure document or other agreements and all other documents a franchise is required to sign to franchise at sba.gov for review of SBA's other eligibility criteria. So the SBA reviews franchise offerings to make sure that they are fair to the franchisee, to make sure that they aren't overly burdensome to possible franchisee. And in most instances, many of the franchises that you've heard of are listed in the directory. Some, however, that are either newer or maybe, as mentioned, have some affiliation issues are not listed. And so that's a unique case. Bankruptcy, applicants that are operating under an approved plan of reorganization under either a Chapter 11, Chapter 12, or Chapter 13 bankruptcy and meet all program requirements are eligible for funding. An applicant is not eligible if it has permanently closed, filed a Chapter 7 liquidation bankruptcy, or filed for either a Chapter 7, Chapter 11, Chapter 12, or Chapter 13 bankruptcy, but is not under an approved plan of reorganization. Permanently closed does not include businesses who temporarily closed their doors due to state or local restrictions or other pandemic causes, but are still in operation or have reopened. Who's eligible? Affiliation is a really important piece in this case. Affiliation, and I'm glad that we have a slide to discuss this because it can be sort of a legalistic term, but want to go over how you count your locations and what we mean by affiliation in the case of this program. Typically, when we talk about affiliation in terms of normal lending processes, we're trying to make sure that your business isn't affiliated with entities that we're prevented from lending to. It could be individuals or countries that have embargoes or other situations. It could be individuals or corporations that have issues with past federal debt or obligations. And so lots of things come up when you talk about affiliation. In this case, what we're talking about, I'm going to go over, you must count all locations owned or operating under your applicant business's EIN and your applicant business's affiliates. So even if those are not eligible for RRF. So what they're saying is that if you own multiple business, or if you are a percentage owner in other businesses, within bounds, they're going to want to see that, just because they're also trying to calculate that you are in or own no more than 20 locations, regardless of whether the businesses operate under different names or in different types of businesses. So, for example, if your business and its affiliates own 16 dry cleaners and 5 restaurants, your business has 21 locations, which means your business is not eligible for Restaurant Revitalization Fund. Each place where the applicant or affiliates conduct sales from a permanent structure is counted as a location. If the applicant or affiliates conduct sales from multiple permanent locations, each address is a separate location. For a caterer or a single business with multiple food stands, trucks, or carts, the physical location is where the business is headquartered, i.e., a business with 1 permanent structure and 5 food trucks will have 1 location. A caterer, as an example, will have 1 location. Who's eligible? Affiliation continued. Corporate groups. Locations owned or operated by a single corporate group will count towards the 20 location maximum limit for eligibility and the $10 million aggregate limit on Restaurant Revitalization funding. Businesses that are part of a single corporate group that in aggregate own or operate more than 20 locations are not eligible for RRF funds. When individuals or entities directly or indirectly own or control multiple locations, all locations must be counted towards the 20 location maximum limit for eligibility and the $10 million aggregate limit for funding. This includes any locations that operate under separate tax identification numbers or names and applies whether or not ownership or control is through an individual, management, or holding companies or other entities. For example, an individual owns or controls 16 restaurants, each with separate tax identification numbers, EIN, SSN, ITIN included, and 5 gas stations. Since all of these businesses, restaurants, and gas stations must be counted, none of the restaurants are eligible for RRF funding. Who's eligible? Affiliation continued. When you are filling out your RRF application, you will be asked if the applicant has affiliates. You must select yes if the RRF eligible applicant entity has an equity interest or right to profit distributions of 50% or greater of one or more other business entities. And or you must select yes if any owner of 20% or greater equity interest in the RRF eligible applicant entity has an equity interest or right to profit distributions of 50% or greater of one or more other business entities. And or you must select yes if the applicant business is a holding company or management company that owns or manages a business other than the applicant business, or if the applicant business is held or managed by a company that owns or manages other businesses. You must count these entities as separate affiliates and locations. How do other SBA relief programs impact the Restaurant Revitalization Fund? For Paycheck Protection Program loans, any funds already received through the PPP program, PPP, will be subtracted from the applicant's final funding amount. The applicant is verified using the EIN, ITIN, or SSN associated with its PPP loans. If the applicant received the PPP loan, the applicant must use the same EIN number for its RRF application as it used in its PPP application. If an applicant applied for a first draw PPP loan for multiple locations under one EIN and subsequently applied for a second draw PPP loan under different EINs, the applicant must provide the EINs for each entity that has received the second draw PPP loan. Upon applying for RRF, an applicant must withdraw any outstanding PPP applications. Now, the reason for that is that when you apply for this fund, you attest that you have indicated any federal support that you received in the application. So if your PPP loan is pending, then it's going to be difficult for you to attest to that. All applicants must certify that current economic uncertainty makes the funding request necessary to support ongoing or anticipated operations. Oh, sorry. Here we are. Okay. What are eligible uses of funds? Business expenses, business payroll costs, including sick leave, business utility payments, business maintenance expenses, business supplies, including protective equipment and cleaning materials, business food and beverage expenses, including raw materials, covered supplier costs, business operating expenses, such as insurance, marketing, fees, licenses, legal, point of sale equipment, etc. Construction expenses are included, but typically that would be germane to construction expenses related to the pandemic. So construction of outdoor seating would be an example. Expansion costs are ineligible. So much like the economic injury disaster loan, this is not a growth or expansion loan or funding source. This is a source of funding to try to make you whole in your business. Business debt. You can make payments on any business mortgage obligation, both principal and interest. This does not include any prepayment of principal or interest. Business debt service, both principal and interest. This does not include any prepayment, again, of principal or interest. You can, however, pay rent back to the beginning of the pandemic, which is considered February 15th, 2020. And you can also make credit card payments, which are considered to be typically something you would want to keep current or pay off each month anyway. And you can also pay off lines of credit for the business as well, which are meant to revolve. When do I have to use the funds? The funds must be spent on expenses that were or are incurred between February 15, 2020 and March 11th, 2023. If the business permanently closes after receiving funds, the covered period will end when the business permanently closes or on March 11th, 2023, whichever occurs sooner. Any funds not spent on eligible expenses by the time the covered period ends must be returned to the government. When do we have to use funds? Continued use of funds assessment. After the total awarded funds have been exhausted, entities must provide a detailed expenditure report and certification for the required period. Until applicant completes the use of funds assessment, beginning December 2021, applicants are required to provide self-reported unaudited data detailing the use of distributed funds each year through 2023. The SBA will provide additional guidance that outlines the detailed reporting requirements and procedures in the coming weeks. So there's 3 calculations, well, really 4. We'll go over those as in the next few slides here. Calculation 1 is for applicants in operation prior to or on January 1, 2019. The calculation is 2019 gross receipts minus 2020 gross receipts minus PPP loan amounts. The second calculation is for applicants that begin operation partially through 2019, and that calculation is average 2019 monthly gross receipts times 12 minus 2020 gross receipts minus PPP loan amounts. Applicants that begin operation partially in 2019 may choose to use calculation 2 or calculation 3. However, calculation 3 could require longer processing times, and I'll show you why that is. Calculation 3 is for applicants that begin operation on or between January 1, 2020 and March 10th, 2021, and applicants not yet open but who have incurred eligible expenses as of March 11, 2021. Calculation is the total amount spent on eligible expenses between February 15, 2020 and March 11, 2021 minus 2020 and 2021 gross receipts through March 11, 2021 minus PPP loan amounts. So this will require a little bit of extra scrutiny. In some instances, we're talking about businesses that were pre-revenue, so there'll be close attention paid to the dates and eligibility of the expenses for this part. So calculation 4 is for for applicants that operate multiple locations using different calculations. And so effectively calculation 4 is a catch-all. If you have multiple locations that fall into different calculations or considerations, what it says is that applicants that operate multiple locations may calculate funding amounts for their locations using separate calculation methods and then aggregate the amounts together. The aggregated funding amount is limited to $5 million per location and $10 million for the applicant and its affiliates. What can you exclude from 2020 gross receipts? You do not include any of the following your 2020 gross receipts for the calculation purposes. You can take out Paycheck Protection Program loans, first draw and second draw of the loan received in 2020 and or 2021, SBA Section 1112 payments, SBA Economic Injury Disaster Loan, EIDL Advance, targeted EIDL advance or other grant funds received via the CARES Act can be taken out of the calculation. Any state and local business grants can come out of the calculation as well. How do you apply? To apply, you want to apply directly through our platform at restaurants.sba.gov. That platform is intended to open today for registration. And then on Monday, they should be receiving or accepting applications. So you can register and take a look at it and get prepared. You can also take a look at the application itself, and I'll talk a little bit more about that to get prepared for completing the application. Another interesting point is that you can actually register through your point of sale vendor. The SBA has actually partnered with a few of the prominent point of sale vendors such as Toast, Aloha, Square, and Clover, to allow you to you have 2 options depending on your POS. Some of the POSs will literally allow you to apply for the program through their platform. And some of the providers will allow you to print off a report that will expedite your process for consideration. So the report will come directly out of your POS vendor's system, and that will stand as sort of effectively not an audited financial statement, but a trusted financial statement that'll help you get through the process. One other interesting point about this program, you're welcome to reach out to our local office, but they really want you to go through the hotline that they set up. They will accept also applications through the hotline, but it is not necessarily advisable that you submit a telephonic application unless you have no other choice. But the phone number listed here, the 844-279-8898 number, is the hotline for this. And they really do want people to call that number. They've got over 150 agents there who are trained in how to help people understand this program. And also they have English and of course about 8 other languages spoken. So they have help for everyone, regardless of which language you speak. The documents will you need in order to apply. For the application, you'll need the SBA Form 3172, which is available on our website. You can take a look at that. You need to complete that, initial it, and sign it. Completion of this form digitally on the SBA grant platform will satisfy this requirement. We'll also need verification of your tax information, which is a IRS Form 4506T, which allows us to access your tax transcript. We need that completed and signed by the applicant. Completion of this form digitally on the grant platform will satisfy this requirement. You need gross receipt documentation. So any of the following documents demonstrating gross receipts and, if applicable, eligible expenses. So that could be your business tax returns, your IRS Form 1040 Schedule C or Schedule F. A partnership, for a partnership, you'll need partnerships IRS Form 1065, including K1s, bank statements, externally or internally prepared financial statements, such as income statements and profit and loss statements, and also point of sale reports, including 1099-Ks. Calculations 1 and 2, the required information would be your application, your tax verification form, your 2019 gross receipts and tax returns, and your most recent 3-month statements, bank statements, 2020 gross receipts as well. For documenting that, what we would prefer is to see your federal tax returns filed. And also we would accept point of sale reports. What we would accept for this, but it may delay your application, is externally or internally prepared financial statements such as income statements or profit and loss statements, signed, dated, and certified as to accuracy by the applicant. The calculation 3 has slightly different requirements for application. So we need your application, your tax verification form, your most recent 3 months of bank statements, and your 2020 and 2021 gross receipts. So we would like at least one for each year. So the preferred group are the 2020 federal tax returns filed or 2020 federal tax returns prepared but not yet filed would be acceptable. 2020 point of sale reports and 2021 point of sale reports. What we will accept is externally or internally prepared financial statements such as income statements, profit and loss statements, signed, dated, and certified as to accuracy by the applicant. For eligible expense documentation for expenses between February 15, 2020 and March 11, 2021, we would need at least one of these options here. The preferred option is that you have a qualified third-party accountant, bookkeeper, or CPA issue a comfort letter with the associated profit and loss statements and balance sheet documentation. So that will help us expedite consideration for you. So if you're looking to submit expenses and you're using calculation 3, it would be advisable to have a CPA or bookkeeper issue a comfort letter, which is effectively just them indicating that they're comfortable with your portrayal of your financial situation in your application. Other things that we might accept but may delay review would be externally or internally prepared financial statements such as income statements, profit and loss statements, signed and dated and certified as to accuracy by the applicant, and all expense documentation, for example, payroll documents, outdoor seating expenditures such as invoices and payments, and business debt loan statements. In addition to the documents on the prior slide, for applicants that are a brew pub, tasting room, tap room, brewery, winery, distillery, or bakery, documents evidencing that on-site sales to the public comprise at least 33% of gross receipts for 2019, which may include tax and trade bureau forms, state or local forms filed, or internally created reports from inventory management, sales reporting, or accounting software. For businesses that opened in 2020, the applicant's original business model should have contemplated at least 33% of gross receipts in on-site sales to the public. So that's effectively just saying that if you've opened effectively a wholesaling business, and you don't have any way of proving that your intention was to do business directly to the public, they're trying to help you understand that you have to have some way of proving that your intention to do business was effectively at least 33% of gross receipts to the public. So that's something that's interesting because in some instances, if you just have a wholesale distribution model, you may not have a public entrance, or you may not have any type of retail space or even a POS system. So some of those types of things are things that if you had intended to have in those industries a model where you sold directly to the public, you need to be able to demonstrate that. For applicants that are an inn, documents evidencing that on-site sales of food and beverage to the public comprise at least 33% of gross receipts for 2019. For businesses that opened in 2020, the applicant's original business model should have contemplated at least 33% of gross receipts in on-site sales of food and beverage to the public. How do you get help applying? So you would want to reach out to the call center. Their phone number again is 844-279-8898. You can reach out to our local district office, but again, in effort to make sure that everyone's getting fair and similar advice on this program, we want to really make sure people consider calling the hotline and let us know if you have any issues getting through to the hotline. Help is available at the hotline in multiple languages. Some of the best practices for applying, you want to provide complete documentation. Applications with incomplete documentation will be rejected. The review process will restart when complete documentation is provided. Delays could jeopardize the applicant receiving the award. You want to leverage your resources. While not required, the use of CPAs and other accounting professionals may help ensure a complete and well-documented application. Application corrections. The SBA is not able to make corrections on behalf of applicants. Applicants who require corrections will need to contact the call center hotline. Applicants who still intend to apply for PPP. Restaurant Revitalization Fund applicants are advised to complete their PPP applications in advance of the RRF application. When can I apply? The pilot period was a period where PPP borrowers who self-identify as members of priority groups, which we'll discuss, were randomly selected to effectively pilot the program. We found in rolling out other programs such as the Shutter Venue Operators Grant that it's important to give folks an opportunity to sort of find some of the quirks in your system before you roll it out. And so there were people who were invited to a pilot period to help test out the system. Importantly, however, pilot participants did not receive or will not receive funds until RF is open to the public at the application launch. The priority period is the first 21 days of the program. During the initial 21 days, the 21-day priority period, SBA will accept applications from all eligible applicants. Only applicants from small businesses owned by women, veterans, and socially and economically disadvantaged applicants will be funded during this period. As of day 22, all eligible applications will be processed and funded until program funds are exhausted. What are the priority groups? A small business concern that is at least 51% owned or managed or has daily operations managed by one or more individuals who are women, veterans, and socially economically disadvantaged businesses or individuals. Applicants must self-certify on the application that they meet eligibility requirements. Now, self-certification is something that the SBA has often, but it's not the same as sort of a standing certification you might hold from a women's business center or from another national group. So self-certification is effectively that you are self-identifying and self-certifying this or indicating that this is true. For example, an applicant has 5 owners who each own 20% of the applicant. 2 owners are veterans and 1 owner is a socially and economically disadvantaged individual. The SBA will consider this applicant to meet the requirement that at least 51% of the applicant is owned by a priority group. Our group definition: socially disadvantaged individuals are those who have been subjected to racial or ethnic prejudice or cultural bias because of their identity as a member of a group without regard to their individual qualities. Individuals who are members of the following groups are presumed to be socially disadvantaged: Black Americans, Hispanic Americans, Native Americans, including Alaska Natives and Native Hawaiians, Asian Pacific Americans, or subcontinent Asian Americans. Economically disadvantaged group individuals: those are those socially disadvantaged individuals whose ability to compete in the free enterprise system has been impaired due to diminished capital and credit opportunities as compared to others in the same business area who are not socially disadvantaged. Eligibility as a priority group applicant: entity reorganization for purposes of qualification for the priority period will result in automatic disqualification of the award. There are also funding set-asides, which are really important to make sure that some of the smallest businesses have access to the fund. One, there is a $5 billion set-aside for applicants with 2019 gross receipts of not more than $500,000. There's an additional $4 billion set-aside for applicants with 2019 gross receipts from $501,000 to $1.5 million, and an additional $5 million set-aside for applicants with 2019 gross receipts of not more than $50,000. The SBA reserves the right to reallocate these funds at the discretion of the administrator. And that's all I've got for right now. Thank you very much for having me, and I look forward to answering any questions I can.
Thank you so much. And you were kind of answering some of the questions as they came in throughout your presentation, so that's helpful. I want to bring this one up though again, because I really want to reiterate that help is available for our applicants while they are going through this process. So again, as a reminder, there is a hotline available. Sean, you mentioned that people could call your office, but we really want to be directing them to that hotline. And again, that phone number is available in the comments for you, 844-279-8898. So I think that is just a great resource that you guys have put together that's really going to help with this process. Now is the time for Q&A. So again, feel free to pop those into the comment box at any time. Tamara, she says, I missed the speaker name. Sean Gray is who is joining us from the SBA today. So Sean, again, thank you for joining us. Andy, while we wait for questions to come in, I'm curious on your perspective as to how helpful you feel that this will be to some of our members as you've been out in community and getting to know some of our small business owners and restaurant owners in particular.
Yeah, thanks, Bree. This is absolutely going to be critical for a number of our restaurants, and hopefully for those of you watching this, it will be an opportunity for you to not only shore up those losses from 2020 as compared to 2019, as Sean was saying, but I think for a lot of restaurants, it's going to allow them to even do things like, offer more competitive wages now for their current staff, so that they can get up and running and have the kind of staffing that they need. That's a big issue, and a lot of restaurants have taken on expenses to make outdoor seating available or things like that. That's going to be that's the intent of this, to really help make some of those unintended and unanticipated expenses, make them whole from making those expenses.
And someone asked if the business owner can pay themselves as part of payroll. So one thing I would say is, don't do anything that you haven't been, if you were already paying yourself in 2019, then, absolutely. If you have a record of paying yourself, then that would be, completely reasonable. I would just be thoughtful about making sure that you're doing things that make sense for the entity. So as long as you're sort of keeping that sort of head of the running the business, things that are in the best interest of running the business on, then you usually are not likely to step afoul of our policy, of the government policy, because we're just trying to help you run your business and grow it. We have been sort of inundated with fraudulent stuff, and so the antennae are up in terms of processing documents and looking for things that are untoward or don't make sense. So I would just make sure that everything you submit is backed up by your records, and as long as you're paying yourself as indicated previously in your payroll, then that should be fine.
Mm-hmm.
Great. And we had another question that came in here. I'm going to pop it up on the screen. Are you still eligible to apply for this loan if you did not apply for the PPP or PPE?
Okay, so you can, and that just makes your calculation that much better because the loan is really trying to make you whole with consideration of other sources of federal sort of relief funding that you receive. So if you didn't receive any other source of federal funding, particularly Paycheck Protection Program, if you didn't receive that, then that just makes your calculation more likely to be a positive number. If your calculation is below $1,000 or negative, then you would not apply.
Okay, thank you. And so that was a great reminder. The minimum award is $1,000. So again, if they do those 3 calculations and they find themselves below that threshold, they will not apply or will not be eligible.
Right. And I've heard of some rare instances where people technically could use a couple different calculations. It's very rare that usually for most people, only one of those calculations will make sense based on the age of their business or the time for which they've owned it, right? I think I spoke to someone who sort of bought their business from a close friend, so they technically have access to documentation that could qualify them for one or the other. That's very uncommon, and I would probably, if I were them, because they'll have to attest to legally the documentation. I wouldn't trust, even if it's my dear friend just handing me, oh, here's all my docs. I personally wouldn't attest to that. I mean, maybe if it was my spouse, but then that's not really an arm's length transaction. But I just wouldn't trust that because I have to attest to the government that these documents are true. So you really are going to typically tend to want to apply from your ownership, not from, oh, I'm really close with the previous owner. You know, your ability to attest to their record is limited.
Oh, that's a great point, Sean. Yeah. A couple questions. Well, one point, I just really want to stress that our understanding is that the demand for these funds is going to be very high. And so for anyone watching this, we absolutely recommend that you apply as quickly as you can and get your application in as quickly as you can once that noontime opens on Monday, May 3rd. So that's over the weekend. And kind of with that stress, and with that importance, Sean, my follow-up question then is regarding that hotline, is it open over the weekend for people to call? Yeah. Are there particular hours?
Yeah, I think it's the same hours as our other hotlines, which are, let me see here. Let me double check it. I just want to be sure.
While you're looking, I will say I looked through the sample application form, and if you've been doing fairly consistent record keeping, it doesn't seem like it's anything that's going to be. They're not asking for anything over too difficult to pull or find. So I think I commend the SBA for making it as simple as possible for people to make and not have to jump through too many hoops.
So my asterisk to that, I'm sorry, Sean, would just be really quickly, make sure though that you're not waiting until Monday at noon to gather all of that information. So I just dropped a link in the chat or the comments for everyone to take a look at that application ahead of time. While the information you should have readily available, you want to make sure that you are absolutely prepared with that information over the weekend. And we understand that Friday, Saturday, and Sunday, especially when we're expecting great weather here in Genesee County, is not the ideal time for a restaurant owner to be taking the time to do this. But we really, really hope that you will set aside the time to take a look at this over the weekend.
Yeah, it's actually really important. So typically our customer service centers are open from 8 a.m. to 8 p.m. Eastern. So
that's very helpful. Thanks, Sean. Yeah, and just another reiteration that you can go in and actually register now, like as we speak. You can go in and register, so you can really start the process fairly immediately.
And then I think someone had a question about assistance in the application. The application, as Brianna mentioned, is mostly pretty straightforward. When I looked at the application a couple weeks ago, my only concern was the term affiliation. And I think we've tried to do a good job of talking about what that means and what we're looking for. If you don't have any ownership in any other businesses, then that's pretty straightforward. If you do have ownership in other businesses, then the term affiliation shouldn't be that unfamiliar. So it's sort of a thing where, for the most part, if you don't have any ownership in any other entities that have locations, then you should typically be able to calculate that pretty with relative ease. But you're welcome to call us or call the hotline if you have sort of ambiguity about that.
And I see a note here from some of our colleagues that are on the call, but in the background, behind the scenes. Be sure to submit early and make sure that it's correct, because it will cause a delay. And then she's also going to be sending another link that I'll share to a recorded webinar with a list of how to prepare. So these webinars are here as a resource to you all. We hope that you'll pull them up as you go through the application to make sure that you're doing it correctly. But again, as we've been saying, that hotline is there to help you. So be sure, if you have questions before you hit submit and you want to just double check and make sure that everything is correct, call the hotline and ask just to be safe. All right, I don't see any other questions at this point. Andy or Sean, anything that you guys want to say or reiterate in closing today?
I don't have anything to add, but I'm very grateful for you guys' support and always the opportunity to speak with your constituents. Flint and Genesee are sort of part of my portfolio here at the Michigan District Office. And so if anyone has other questions unrelated to RRF, you're welcome to reach out to me as well. My number is 313-460-2700. And I also support the SCORE folks out that way too. So if folks need help getting connected to the SBDC or SCORE, I'm always here to try to help give people good guidance and counsel on where to go to get support in looking to grow or start their businesses. And I appreciate you guys as partners in that.
Well, Sean, I'd echo that gratitude back to you. And it's really important to us and our local businesses that we have this level of support right here. And so thank you for being the subject matter expert, and for and also gratitude to our legislators, Representative Kildee and others who have even made this possible. And it's recognizing the importance of this level of support. So thank you all. I really appreciate it. We all really appreciate it.
Yes, and thank you to our viewers for tuning in today. A lot of information for 9 a.m. I know, but we want to make sure that you guys are as prepared as possible. As a reminder, a recording to this webinar will be available on our Facebook page, our YouTube channel, and our website following today's session, along with a couple of additional resources. I dropped in the comments the link to the webinar that was referenced just a few moments ago to kind of help you gather that list of things to prepare. If you need anything at all, please don't hesitate to reach out to us at the Flint and Genesee Group and the Flint and Genesee Chamber. We are here to help as well with any additional information that you may need. So Andy and Sean, thank you guys so much for joining us this morning. And to our viewers, thank you again, and feel free to reach out for anything that you need. Have a great day, everyone.